Sensex and Nifty declined by 1%. Financials see a sharp fall in the last hour. The Nifty breaches 21,500 in an intraday basis.
Mutual fund industry assets under management crossed 50 lakh crore rupees for the first time. Equity mutual funds see nearly 17,000 crores in inflows in the month of December. Small cap funds continue to see a deluge of money, while large cap funds see marginal outflows.
Shares of Godrej Consumer Marico slide after weak business updates in Q3, but shares of Sula surge after CLSA upgrades. The Maharashtra government plans to revive the wine industrial promotion scheme for 5 years.
Hello and welcome to a fresh new edition of Markets Forward, the show where we will wrap up the day which has gone by, but more importantly, we'll get you all the key data points which should help you prepare and gear up for the next trading session. I'm Prashant, with me, my colleague Rima. Rima, hi.
Hi, and we've got you covered for the next 20 minutes with all the big news, the key developments on Dalal Street, top corporate voices and events to track. But first, the market action. Disappointing, right? Day one of the second week of 2024 and you're staring at red on the screen.
Yeah, and we're not used to it, right? And that too 200 points. So double century, but on the way down. Usually we're used to double centuries on the way up. So I think that was what was jarring today. But weekday, because global markets have been on a bit of a back foot, weakish note as well. And I think today's price action also reflects, the catch-up to what US is doing. US over the last 4 sessions it is traded in 2024 is down about 1.5% or so. So, the Nifty down about 200, the Nifty Bank down about 700 points, mid caps and small caps under pressure. PSU banks, it basically was just pullback after very strong performance. That's about it. Public sector banks, metals, which had run up recently. FMCG, of course, there were updates from names like Marico, Godrej Consumer, etc. So that pack was under pressure. And where do we go from here? I think we put these levels out in the morning as well. For the Nifty, it is 21,400, which is roughly the 20-day moving average. As of today's close, I think we've left off about 100 points from that. Hopefully, we stop there. Nifty Bank has been the weaker. People have been waiting for that part of the market, large cap banks, to do better. But that now today firmly closed below the 20-day moving average, which doesn't bode very well. And point is, without the Nifty Bank performing in a meaningful, substantial way, it kind of will be difficult for the Nifty to do well as well. The other factor, of course, is going to be the other big sort of part of the market is IT. And with IT, Rima, with IT earnings later this week on Thursday, I think that should decide the course as well near term.
Absolutely. So the Nifty IT index has gone up 23% in the last 1 year
Yeah.
with no improvement in demand.
Yeah.
So stocks have already run up in anticipation that sometime in the next quarter we will see growth bottoming out. But the day's action, the Nifty ends down 197 points above 21,500, 21,513 at close. But intraday, we breached the 21,500 mark, going down to 21,492. Broad-based selling, and if you look at that intraday chart, you would see it was a grind down. At no point of time there was any intraday bounce or any sort of a pullback. Mid-caps end the day with a cut of about 1%, but year-to-date, the mid-cap index still has a gain of 1.5%. The sectors which were under pressure, in fact, there was no sector which provided any kind of support. PSU banks led the losses, FMCG was weak, IT index was down close to about 1%. Even realty index, which was up in the green throughout the day, at one point of time up nearly 2%, finally ended absolutely on the lower side. The big FMCG losers in the large cap space, ITC, Asian Paints, Britannia, Tata Consumer, and other notable drags on the Nifty included UPL, SBI, Divi's Laboratory, M&M, across various sectors. So it was a broad-based sell-off. But here's what we've lined up for you on our show today. We start with the top movers of the day. Vivek joins in. Then there are a bunch of stocks which were in focus that include Sula, Marico, RT Industries. We'll tell you the key reasons why these stocks were buzzing in trade. And last but not the least, we delve into the key market events to watch out for tomorrow's trading session.
Well, let's go across to Vivek, who's standing by now to talk to us about the big movers of the day, both up and down, but more down than up today. Vivek, over to you.
Well, you're absolutely right. Across the board, like you mentioned, hardly any green on today's screen. But a couple of stocks and one particular sector that stood out today in terms of actually seeing some buying activity. So the first set of stocks that will come up for you on your screen are the media stocks. Today, the entire media pack did quite well. Good volumes as well. So music broadcast TV today, Dish TV, ST Media, all of them did quite well. Even TV18 and Network 18 also did quite well in the session today. Now, the next stock on the radar is GMR Airports. GMR Airports, a couple of important news flow came. Number one, an arbitration that the company was fighting, it actually came in their favor. And along with that, a couple of block deals happened. So close to 1% equity changed hands over here. And post that, the stock managed to recover and managed to stay in green today. The next stock on our radar is Capri Global. This particular stock, the top gainer as far as NSE 500 is concerned, today up on very, very strong volumes. Interesting to see whether any disclosure comes about as far as Capri Global is concerned. The last stock in terms of the gaining pack, Trident. This particular stock, even in a dull market today, up 17.5%, good volumes. And again, there has been certain amount of buying that have been coming about in certain brokerages in terms of the textile pack. Now coming to the losing pack, whole host of stocks, whole host of sectors. The first sector that you're looking at is the banking stocks. So it's a mix of, when you're talking about news flow, it's a mix of slightly muted operational updates, in terms of Federal not getting an extension, as well as, the PSU main banks seeing quite a bit of selling pressure. So overall, banking pack weak today. Then we are coming to the FMCG pack. FMCG pack, again, even though Q3 operational updates for some of the companies like Dabur weren't that bad, other companies saw muted updates coming in. And again, the entire pack today under quite a bit of selling pressure. The next pack that we're talking about is the chemical pack, especially when you're talking about some of the chemical stocks today. Have a look at UPL and Aarti Industries. Both of these stocks are impacted by the fact that one important herbicide in the EU market will be banned from November 2024. Back of that, did see significant selling pressure there, and a whole host of other stocks too saw quite a bit of selling pressure. And lastly, Sun Pharma Advanced, we alerted you in the morning that the company actually saw a positive response to the new drug that they're developing. But remember, the stock saw a stellar rally last week, and post that today saw a bit of profit booking.
Thank you for all those insights. You spoke about chemicals and how across the board chemical stocks sold off. Let's zero in on Aarti Industries. So stock was down 4%. The European Union has decided not to renew an approval. How does this impact Aarti Industries? Sonal joins in for more. Sonal.
Thank you so much for that. Well, let me give you some backdrop to this. Last week itself, Aarti Industries reported to the exchanges that they've entered into a long-term supply contract for an agrochemical intermediate to a global supplier. And this is for a period of around 9 years, and the total contract value is 3,000 crore rupees. So this is something which was taken positively by the street, because it was the fourth long-term contract that the company had entered into, and it did indicate higher profitability as well. But now there is a negative news. This is coming in because the new long-term contract for Aarti Industries was for intermediate of a product which is called S-metolachlor. As per the latest update, the European Union has gone ahead and they have not renewed the approvals that this market has for this particular product. And now it will impact Aarti Industries because they were to supply the advanced intermediates for this particular final product. The other company which tends to disadvantage from this is UPL, because they are actually the final producer of this particular product. So European Union volumes in that case will actually fall for these companies. This would mean pricing pressure as well and volume pressure. So volume offtake for both UPL and the Aarti Industries will go down because of this approval that has not come by. Now, Equirus has put out some interesting data that between 2017 and 2019, Aarti Industries entered into 3 long-term contracts which indicated material revenue contribution. However, one of them was actually called off. They got material compensation for that, around $120 to $130 million. The others are way past the time period in which they should have gotten that particular revenue contribution. So they are not really getting the benefits of the long-term contracts they have been entering into. And now this one that they have gotten, there's a reversal in terms of volumes as well here. This delay raises questions on their eventual revenue impact. And that is something that the street is not liking, because despite them winning this big award this time around, the stock is still down 8% year to date, and it has been an underperformer in the chemical space so far. So that's why that stock is on our radar.
Just as the rally in Aarti was starting, I mean, it was a month and a half old from the lows of 450. There's this news which comes through. Well, Sonal, thanks very much for that. Shilpa, Rout, the Prabhudas, Lilladher is with us. So is Gurmeet, Chadha. Thanks both of you for joining in. Gurmeet, remember, not Aarti, but you own PI Industries, and you've been a big advocate there. I mean, is this a risk for other companies like PI, etc. as well?
I think in general, chemical companies have been under pressure, and Prashansi, 24 will also be a year where global growth is already being looking at 2.5, so will be weak. And then obviously there is China factor. PI, I think, was more related to the molecule they are in, and a Chinese company, getting into production in middle of 2025. So I think it was a little far-fetched in my view. But when you trade at high valuations, market discount future, and any such event in future has an impact. So I think they will be under pressure. Even the earnings, in my view, will be a little soft. So it's a good time to probably do some bottom fishing if you have a relatively, long-term view. Companies with, so PI, for example, has great relationship with innovator companies, uh, extremely well backward integrated. If you see their innovation rate, they almost commercialize 2 molecules every quarter. Then they have plans around, the pharma as well, other than just being, the CDMO player in agri space. So I think good dips could be opportunities. And, something like maybe a Tata Chemical, again, soda ash prices have been cut twice, but trades at about 11, 12 times, bit of element of Reliance India also there. And they're getting into battery chemicals also. So there is valuation comfort in some pockets. Even Deepak Nitrite, if you see, there's been almost 1.5 years of underperformance. So some bit of negative news in the price, maybe the quarterly earnings would probably give you, probably better entry opportunities.
Fair enough. Shilpa, what have you made of the price action of today's trade? Technically, does it open up further downside in tomorrow's trade? And what would your stock calls be for tomorrow?
Good afternoon, Reema and Prashant, and thank you for having me on the show. Talking about today's fall, yes, on expected lines, we were, expecting this sort of a fall anytime soon because of the overheated, version of the market. We saw that. But talking of today's fall particularly, yes, 21,500 holds a very crucial support zones, and we have closed just around that. So tomorrow, if we sustain this and we see some sort of gap up happening and these levels are held on to it, then we might see a trend reversal again towards 21,800 zones. Otherwise, one should be prepared to see 21,200 levels happening in a couple of days. Talking about Bank Nifty looks more weaker from here. The breach of levels of 47,500 here, significantly shows there's a little more downside to be played on this index towards 46,500. So I have, one buy and one sell. My sell would be with, Bandhan Bank. Bandhan Bank, has seen a massive fall today, and this weakness is likely to continue till levels of 220 as well. So one can stay short in Bandhan Bank with a stop loss of 240 from here for targets of 220 to 215. The other one would be a buy in Sun TV. Sun TV, though today, has closed in minor red, but looking at market fall, I believe Sun TV is still holding on very well to the levels of 715, 710 zones. So this is where a very crucial support holds. So as long as we are trading above 710, we are good to see levels of 745 to 760 coming soon.
Thank you very much for that. But the stock of the day undoubtedly was Sula Vineyards. In a weak market, it ended with a gain of 16%. And this is as the Maharashtra government looks to revive wine promotion schemes. CLSA too has a very bullish call on the stock. Mangalam with the details. Mangalam.
Well, the up move for Sula started on Friday itself. From there to now, the stock has rallied about 30% in just the last 2 trading sessions. And today as well, like you pointed out, up around 19%. And this as the Maharashtra government has gone ahead and planned to revive the wine industrial promotion scheme for 5 years. Under this scheme, what basically happens is that the 20% VAT that wine producers pay to the state government, they are eligible for 80% of that VAT as a refund. That's roughly 16% basically. So what this does for Sula is that the industry, the Maharashtrian industry, wine industry, pays about 100 crore VAT annually. 50% market share belongs to Sula. So, roughly 30 to 40 crores over the last 4 years get accumulated, and Sula, gets access to those refunds as well. CLSA has written on Sula. They believe that this reinstatement will shift focus to the volume growth opportunity, of which Sula will be the big beneficiary because of their 50% market share in Maharashtra. And that's not all. Wine penetration in India is low. That increasing will also benefit Sula more than all the other players. And as a result of which, they've upped their EPS estimates, and they've taken a massive leap in their target price estimates as well, from 571 rupees to around 863 rupees, and over 50% jump out there with a buy call upgraded from outperform.
Mangalam, but that's Sula. Let's talk about the other consumer pack, very different from the wine business. The staples, Marico and Godrej Consumer, they fell sharply, 4% or so on the back of third quarter business updates. Take us through those.
Well, for both Marico as well as Godrej Consumer, the weakness was that the street was anticipating some recovery in the third quarter because of festive season and monsoon, but that wasn't to come by. No major shift in in consumer sentiment due to the festive season has taken place. For Godrej Consumer, the company expects double-digit revenue decline that would largely be led by, currency loss translation. And on a constant currency base, they will see near double-digit revenue growth, mid-single-digit volume growth as well. The Indian business doing well for them. The Indonesian business is also recovering well, but it's the African business where they are planning a restructuring, and the LATAM business, which is struggling for them. Overall, the revenue decline is something that the street does not like. For Marico as well, the business was led lower by some of their key products, the likes of Parachute Coconut Oil, Saffola, which on a high base and weak trade sentiment, along with value-added hair oils, not doing too well for Marico. The things that did well for Marico were, premium products as well as food, but that was something that the street was factoring in already. The weakness for both these companies were on the top line, even though there would be margin expansion for both Godrej and Marico. Margin expansion, the street was expecting. Top line weakness, not so much.
Thank you very much for that. Gurmeet, do you expect this anemic growth for the likes of Marico, Godrej Consumer to continue in the foreseeable future? Because while this entire premiumization story plays out, we see those companies clocking in a 20-30% year-on-year kind of growth. But the Marico, GCPL, they're struggling with not struggling, but they're still growing in that mid-single-digit kind of growth rate. So where from here?
No, I agree, and so the volume growth hasn't come. I think consumers saw a bit of re-rating kind of triggers with Mr. Sudhir Sitapati coming over. But I think if you see, my father's been a distributor for them for a very long period in MP. I think the ability to move out of this household insecticide, which they are very strong at, into other segments hasn't really panned out the way. There's been multiple attempts on personal care and other segments in BPC as well. Similarly for Marico, the dependence on Parachute and the way other value-added products should have taken off and the food business hasn't been there. It's been there for Tata Consumer, so it's there visible on the price. It's been there for some of the other names like Varun Beverages. Again, not exactly similar to them, but expanding more geographies. They recently acquired. So when you trade at high multiples, you need to get high growth. At mid-single-digit volume growth and 12-13% value growth, it will be difficult to sustain. Godrej Consumer, for example, is 68 times trailing and about 50-55 times forward. You will not be able to justify this because the rate of interest are still high. So discounting rate is still high. So I think maybe we are more constructive on the likes of the ITC and places like Varun Beverage and Tata Consumer, where actually the volume growth is double-digit and value growth is probably in 20% plus range.
Okay, all right. Shilpa, briefly, you want to come in on Sula? I mean, it's 20% higher, price-wise very strong. Is it headed higher?
Yes, definitely. If you look at Sula, that is the stock of the day today. And this up move of 100 points or so today, it shows that, there's resilience for the stock and it's all set to test, 660 to 680 zones in coming days. So on decline still, maybe 630, 620, one should be prepared to average it out or, once again enter and stay long for this, targets of 730, 740 in coming days.
Right, buy on dips. That's the advice on Sula coming in from Shilpa. Shilpa, thanks very much for joining us in Gurmeet. Thank you very much for joining us here on Markets Forward. Thanks very much for your time. We'll take a quick commercial break here. We come back with the big corporate voices of the day that we had on the channel. And of course, the events to watch when we come back tomorrow. Stay with us. Okay, welcome back. On to a CNBC-TV18 exclusive. Bharat Forge expects revenues to hit 20,000 crore rupees in 2 years. That's the word coming in from the company's CMD, Baba Kalyani. In a chat with my colleague Shireen Bhan, he also bets on the defense vertical in a big way. Here's a slice of that conversation.
But what I want to understand from you is the pace of acceleration that you've seen? And I know you said previously that the last 10 years have perhaps been the busiest that you've seen in your career. It took you 45 years to get to 10,000 crores, 20,000 crores next year, or
year after next.
Year after next. On track to get to that?
Yes, very much. There are some businesses that will grow faster than the others, there's no doubt. For example, I think the defense business will go faster than most other verticals. And there might be a time in the next few years where that business will be bigger than our core business. Because it also uses our core business technologies like metal forming, forging, machining, etc. So, that's a great possibility. And if that happens, it would be better off as an independent company.
Okay, real estate sector too has been grabbing headlines with a stunning rally over the past few weeks on the back of strong sales trend. We had a chat with Abhishek Lodha, MD and CEO of Macrotech Developers, popularly known as Lodha, who said that real estate is only in the fourth year of a 15-year upcycle.
The fact is that the demand across the board is quite strong. I think, different people will have different figures, but the fact is that the industry across different price points is growing quite well. Having said that, I think, we look and guide our investors on a full year basis. Okay. On a full year basis, we had guided to 20% growth, and we feel pretty good about delivering on that 20% growth.
Okay, well, those are big businesses on CNBC-TV18 today. The other sort of talking point, which has been sort of there for the last 1 month, but which is starting to hit businesses, is freight costs rising due to the disruption in the Red Sea. We spoke with the representative of the Container Shipping Lines Association today, who said that freight rates between India and US have risen 70% over the last 1 month or so, while those for routes between India and Europe are up over 100%. Okay, well, that's some opinion that we had through the course of the day. But let's shift focus to the key market events to watch out for as we come back tomorrow. Back to Mangalam for those. Mangalam.
We'll obviously watch out for a lot of stocks where the board meetings have been taking place today for decisions and entire clarity tomorrow. Bajaj Auto being one of them. But importantly, Delta Corp, the board meets tomorrow to discuss their third quarter results as well. And this is a seasonally strong quarter for them. So to that extent, it will be an important one to track in light of all the regulatory hurdles that the company has been facing too. Vibrant Gujarat, the 10th edition of this summit starts tomorrow. So obviously, we'll get a lot of important voices coming in from corporate India and global leaders as well. A lot of them expected to attend this event as well. So that will be an important one to watch out for. And finally, it was the Nifty Bank which underperformed in today's trading session. Will it recover tomorrow? Largely because it's FinNifty weekly options expiry. We'll watch out for that.
Thank you. And with that, it's a wrap in this edition of Markets Forward. We'll be back with more news and updates on the other side.